Sanjiv Bajaj joins me right now. Thank you so much for joining us, sir. Pleasure talking to you. Just break up the numbers for me, because I was sensing that the estimates that we had from the markets were lower than what you've delivered. I'm a little surprised that the stock is not doing that well today. But just break up the numbers for us. Where did the growth come from mostly?
Sure. So if you see, as you correctly pointed out, our consolidated PAT was up 15%. If you look at three main operating companies, Bajaj Finance saw profit after tax grow 54% to 424 crore, clearly the greatest positive contributor. As far as the general insurance company was concerned, profit fell a little bit from 147 to 132 crore, so a small drop over there. Whereas our life insurance company saw a marginal improvement in shareholders' profit after tax from 241 to 244 crore. So clearly the highlight was Bajaj Finance that contributed to the PAT, and while I really have no view on where the stock price goes in the short term, but one of the reasons could be the significant increase in the stock yesterday.
Right. Absolutely. Just give us a sense as to the breakup of Bajaj Finance, because you've managed to keep your NPLs very strongly under control. But when I look at the breakup, the two-wheeler and three-wheeler segment, there seems to be the NPL out there seems to be higher.
So, you really need to see segment by segment what's the risk in each of those segments for the customers that we end up financing and what's the return. And while the two-wheeler segment and the three-wheeler segment caters to a lower income, excuse me, the returns also end up being higher. So that's why the loss numbers there end up being a little higher than in our other segments.
Right. So, which is why you are willing to take a slight bigger risk there? Is that fair to say?
Absolutely. So we run actually a large number of algorithms at the back end. We ping a number of credit bureaus, and then we come to a score for individual customers that we are comfortable lending to. But keeping in mind that the provisioning and the losses on the two and three-wheeler portfolios is expected to be higher than, for example, consumer products. Our pricing accordingly will also reflect a slightly higher pricing, so that the margins we earn end up being similar.
In terms of personal loans, where has the growth come in? I mean, what kind of profile would that be?
So our personal loans are by and large a cross-sell to existing customers, and these are mostly customers who, for example, on civil will have a credit score of 750 and above, and these are amongst the best customers that you can lend to.
All right. Give us a sense of what is happening on the AUM front.
The AUM is again for Bajaj Finance seen a very strong growth, to 40% to just under 50,000 crores, and 40% of our AUM comes from the consumer business. We saw strong growth in the first quarter, aided largely by sales of air conditioners. There was an extended summer season, as we know, and air conditioner growth was significant. In addition, what we've done on the consumer side is that realizing that we are the largest players in this segment, every year we end up expanding the number of segments that we can offer financing to. So from consumer durables, household electronics, we moved to handheld devices, mobile phones. Okay. We've now tied up with Flipkart, with Future Group, across groceries, across apparel. So the segments are ever expanding, and that is what is giving us a significant part of the growth as well.
But when I look at the AUM growth, as you mentioned, consumer side has really given a major boost. Its proportion has also increased. SME seems to have dropped. What is the reason for that?
This partly ends up being cyclical. So we will see in the first and third quarter consumer growth being higher than in the other segments. SME, for example, is by and large stable through the year. So I would expect to get a little balance when you go into Q2.
What proportion would that come back to? I mean, it's dropped to 40%. Where would you see it going back to?
Typically, I would see it at around 45.
Okay.
But it's 5% on a fairly large number.
Give me a sense of the insurance business. The insurance has been a bit of a laggard, right?
Again, the life and the non-life are exhibiting different performance characteristics. The life business, for example, we ended last year as the second most profitable non-life company, this time even taking into account public sector companies. I think that's a very significant feat. And you find that there are over 20 non-life companies, so everybody is competing in similar markets, similar products. I think balance of top line and bottom line is very important, and that's what the company's been able to exhibit. So while our PAT is slightly down, 15 crores on the 147 crore, but our gross premium is up 16%. It will still, we've not seen the numbers, Q1 numbers for our peers, but I'm sure this will still put us there as amongst the most profitable non-life companies. The life business is slightly different. As we know, access to one of the largest distribution channels, that's banker, is now allowed by the regulator from 1st April to more than one insurance company per bank. Banks are setting out RFPs. I think towards the end of this year, a few banks will announce multiple partnerships. This is a very significant step that the regulator has taken, and while it may take a year or two for the insurance companies like us, which are not bank promoted, to get tie-ups with a few significant banks, this will help us increase business quite a bit. In the interim, we continue to focus on two things. One is on strengthening our agency channels. So that is today our biggest channel. Half our business comes from there. It is to focus more on individual products, insurance products, rather than group products. Group products are easier to sell, but most of them end up being single premiums. So you don't get the renewal benefit the next year. And it's like you're on a treadmill all the time. Whereas the individual product, while it's more difficult to sell, it gives you a trail premium. So it helps you, like in a banking book, build up a profit in and business in coming years from business written in the first year itself. And we have seen very solid growth in our individual premium in the first quarter from 97 crore last year to 126 crore this year. And we're hoping to continue with that focus for the rest of the year.
Okay, let me come back to the financing part, Bajaj Finance mostly. And what are your expectations from a good monsoon with OROP, with 7th pay commission? What is the kind of growth you're seeing in the next, let's say, 2-3 quarters?
Well, you can see that without all those things happening, we have grown our income 32%, over 30%, 39% actually in this quarter. If those things happen, it gives us, I think, greater opportunity to see growth across multiple segments.
All right. One final question, and I know you're very busy and we're taking up your time, but we've got you, so I'm going to ask you one more question, and that's about the cost-to-income ratio. When I compare it to several other peers, it seems slightly high. I won't say majorly high, but slightly high. What are you doing to try and control it?
So again, over here, firstly, happy to answer as many questions as you have. That's my job. But the cost-to-income ratio, you have to differentiate us from other NBFCs and look at us as banks, because the investments we are making in our business on ops, on technology, on risk, on analytics is closer to banks than what it is to NBFCs. And hence our cost-to-income will be closer to banks. Even there, as we see the books stabilize in the remaining quarters, because as I said, the consumer business, which is short-tail business, ends up spiking the operating costs as well, because it's very heavily manpower driven. We are in 20,000 stores, we've got 12,000 people manning those stores. So, and their incentives go up as they do more business, and as it should. But as that streamlines in the second quarter, we should see by the second quarter these numbers stabilizing, but they will still be higher than the normal NBFC, because we have built the business like a bank.
All right, since you're saying that we should look at you as a bank, how soon are we going to see a Bajaj bank?
Well, you know, we have the best of both worlds. We have the conservatism, we have the internal structure, the processes of a bank, but we have the flexibility of an NBFC. So we are the best of both worlds. Why should we look at anything else?
All right, that's a fair point, absolutely. Thanks a lot, Sanjiv Bajaj, for joining us. Pleasure talking to you.